backstage.
Right.
They would seriously think something is wrong with me, but I'm
When
all
you
good.
enjoy your music more than the guests, right? Like I don't.
I really do. Like,
I hope my guests
hey.
love our intro music too, because we love it a lot as well. So,
Yes, we
but
do.
it's Wednesday. It's another water cooler Wednesday.
Yes, it is.
Yes. And today we're going to talk about the financial preparations of buying buyers and sellers. Like, what do you need to do in order to get ready to purchase a home or to sell your home? A lot of
Yeah,
times people think, oh, okay, I want to sell my home or I want to buy my home. And but you can't just do it right away. You got to do some prep work in order to
some
get that done. And
preparation.
so,
Yep, I would
right?
agree.
And so today we're going to talk a little bit about that and give you some tips and tools that you can use in order to prepare for that. So my name is Dione Branch, and
That's right. You do have a name.
yes, I do. Right. My name is Dione Branch with the Lord Dream Homes, and I'm here with
The
go
house money mama. Even though that's not my real name, that's my code name. But Lisa White, part of Nexa Mortgage, the brokers are better network, here for your financing needs. Yes.
all right, all right. So now, Lisa, what do people need to do to prepare to as a buyer to purchase a home?
Yeah. So first you have to do that dance that I was doing in backstage. If you get that, you are off to a really good start. And then after that, most people usually actually end up getting in contact with you first, because usually people, they have a tendency to just kind of browse the internet. They'll see things that they like, and then,
Yeah.
they click on the button, they get in contact with the realtor. But the realtor, a good realtor, like yourself, is going to tell them, get in contact with the house money mama, because you have to get pre-approved first. So that's always going to be your very first step. You have to evaluate your mortgage options. So we're going to look at the different ways that you can actually get into a home, because there are different products that we have available. So for example, there's government funding, there's also conventional financing that you can use. A lot of times I do have discussions with people about what would work best for them, because some people are able to do either or. Sometimes you're just one.
Yeah.
So, like for example, and here's, well, you don't have to just be one on this one, but this is a good example. USDA. You may want to go USDA, because where you're buying, is that specific to the type of property that you're going to buy. Maybe it's someplace rural, it may have a farm attached or something like that, so you want to do USDA finance for that. You may have to go FHA. Maybe you're a little bit credit challenged. We're okay with that, but that does mean we have to put you in a specific type of loan. Usually that loan is going to be an FHA loan. So that's another option for mortgage. And then also there's going to be just your regular conventional financing. So that type of financing is more for the people that are usually the better qualified buyers. The way that I normally explain the difference as far as cost goes between conventional and FHA is that FHA costs less upfront, but it actually costs more over the entire duration of the loan. And conventional financing is actually the opposite. It costs more upfront, but it actually costs less over the entire duration of the loan. So if you stay in a loan for 30 years in FHA, you actually end up paying more than if you stayed in a loan for conventional for the entire 30 years. So that's a
Right.
little bit different between them.
Mm-hmm.
Barrier to entry is a little less difficult for FHA because of credit, and also because of the fees and stuff that you pay up front, that you have to
Right.
pay a little bit less. Yeah.
Yeah. And I think you've said in the past, like conventional is a little less forgiving.
A little,
And
yes.
so that's why
Yes,
people
they're not very
end up,
forgiving.
right, right. A lot of people end up doing FHA because you might have a couple of little things on your credit or big things, right? But you have some things on your credit and that'll put you in an FHA loan. And then I think I've also heard, sometimes maybe you may be able to do VA or FHA, and sometimes maybe one might be better than the other depending on the time, right? So
That's true. Yep. That's true. It may depend on, the time frame. It may depend on what the seller is looking for sometimes. Usually VA is probably going to be a better loan than for the buyer
Yeah.
than FHA. The only reason I say that is because the as far as the fees go, one, what you pay per month is going to be less because VA loans do not have the private mortgage insurance. And if you compare that to FHA always has private mortgage insurance. So that's one difference in cost just right there. Um, VA loans have a couple other drawbacks as
Yeah.
far as how long they take, to get underwritten. They can take a little bit longer. So sometimes that's not very appealing to a seller. It depends on
Mm-hmm.
the situation.
Mm-hmm.
So you have to. Sometimes people just want to make a loan scenario or a house buying scenario into just one thing. Like it's just cost, it's just numbers. But it's not. You have to look at a number of different factors as a seasoned professional in order to determine what really is the best option or best path for your client to
Right.
take.
Yeah. Yeah. And then the other thing is kind of like the hidden costs of buying, right?
Mm-hmm.
So there's a couple of things like property tax, right?
Oh
So
yeah,
when you're looking at properties, property tax does play an important factor in your approval, that after we've received your approval from Lisa and we're ready to go out and look. So
mm-hmm.
Lisa will give you an estimate of what you're approved for, and she gives you an estimate of how much taxes you could afford. So a lot of times we try to, if we're looking in the suburbs, we used to do around 4,500, but the taxes have gone up in the
Yeah,
suburbs
we're like
over,
around 8,000.
right,
Well,
over
geez.
recent. Yes. And
Yes.
so, depending on your approval, so the lower the taxes, the more you can afford, and the higher the taxes, that means your approval amount may go down lower because
Yeah.
she's giving you a set monthly amount that you're approved for, and all of that just kind of varies. So
Right.
when we're preparing financially for a house, we have to make sure that we also prepare for the taxes that will be included in the purchase of the home. A lot of
Right.
times, most times, your taxes are included in your mortgage,
Yeah.
right? So as long as you have a mortgage, your taxes are included in there. Conventional includes the taxes as well.
It depends. With conventional, you actually have the option of not escrowing. It
Okay.
depends on how much money you put down. You do have the option of not escrowing, that you can pay it yourself.
Yeah. Yeah. So that's why taxes are really important. The other thing that's also included in your pre-approval or additional cost that's included in the financing is your homeowner's insurance,
Yep.
right? So um, again, another thing that has kind of recently gone up is
Oh my
homeowners
goodness.
insurance, right? So I recently had a client. She purchased a building in the city, and
Mhm.
her insurance was like $3,000. Whereas,
Whereas normally it probably would have been about 1,800.
yes, yes. So
Mhm.
things like that also affect your how much you can purchase in your transaction.
Right.
So, and as well as with your budgeting, right? So making sure that you're budgeting for these expenses, these additional expenses as you're purchasing a home, and making sure you kind of stay within that budget to help you later on, because after we've have, the good thing about FHA is that your homeowner's insurance is included in your mortgage, and your taxes are included
Taxes.
in your mortgage. So
Yep.
that's just one lump payment that you have to pay. But
Yep.
we have to remember the house does need a little maintenance.
Uh-oh.
Yes. Right. So sometimes there's some reason why some people like to continue to rent, but it's not something that should scare you. But it's out. But what you should do is prepare for it.
Right.
Right, during your home inspection, your inspector is going to take you through out the house, they're going to give you information about the house. They're going to let you know that your roof is about 5 years old, or maybe it's 15 years old. And so you only have 5 more years left on the roof. So you know that you need to start saving for a new roof. Uh,
Absolutely.
right? You know that you might have a furnace. The inspector might let you know that your furnace is a little older, or just making sure you do the regular maintenance upkeep of your furnace will actually allow your furnace to live for a long
Yeah,
time, right?
that's
So,
true.
well, you can have a new furnace and take terrible care of it and end up needing a new furnace. So, but
Right.
to take that time to do have the HVAC guy come out on, was it once a year, twice a year, looking at your furnace to inspect it, before the winter, before the summer, because you want to check out your heating, you want to check it out before you turn the air conditioner on. It's normally like $79, or a little bit more. Bend it.
Right.
But those are different things. Those are maintenance things that you need to prepare for your property, as well as any special projects that you might want to do later on down the line.
Yeah.
Um, you know, and so make sure you budget for those things.
Absolutely. And so those are some of the things that you have to, take into consideration while you're in the house. But even before you get there, there's three things that a lot of people don't really think about, because this comes up a lot of times for us when we're like when we first get in contact with someone. There
Hmm.
are three things that people don't necessarily think about as being like their upfront expenses, if you will. So for example, when you're getting ready to buy a home, you're going to have earnest money. It's
Yes.
just it's standard, it's what we do. You can so and the other things would be you got to be prepared, like you mentioned, the home inspection, and then appraisal fees. These are all things that you have to be prepared to pay right up front. Now, for me, I normally do talk with the person, let them know, because that's part of the cost, for
Yeah.
appraisal fees, because that's something that's required by your lender. No lender is going to put a lien on the home if they don't know the value of it. It has to
Hmm.
be worth at least what you're going to pay for it, because if it's worth less than that, then the lender's not going to want to put a lien on it, because why, you wouldn't put a invest in something that's upside down,
Right. And when
yeah.
I start out with the buyer, I do let them know that there's three important things that happens at the beginning of the transaction, as Lisa had just shared with us. And
Hmm.
normally that cost, could be around $2,000 at the beginning of the transaction. So your
Okay.
earnest money could be around $1,000.
Yeah.
Your home inspection could go from around 350 to $500.
Hmm.
And then your appraisal, which Lisa, how much is the appraisals going for right now?
Appraisals can be between 550 and 650 for a single family home.
Okay.
Yep. So
So when
you're
you're
right, right
budgeting,
around 2 grand. If you got about 2,000, 2,200, then you'll
right?
definitely have it covered.
Yeah. So right. So when you're budgeting, make sure you think of that upfront cost right away of what you're gonna need, because we're gonna find a house, and then 3 days, 3 business days after that, we're off and running. You have to have your earnest money within 2 business days, and you have to do a home inspection within the 5 days window. So then at that time, after the inspection, you're gonna share that information with the seller as far as credits that you might want or repairs that you might want on the property.
Yeah. I actually
Mhm.
just had somebody who we had talked about these things up front. And so I'm not sure why he didn't keep the $1,000 in his account, but the seller wasn't too happy when he didn't have the earnest money, because he needed to pull it down from one of his accounts, one of his
It's
retirement accounts.
401k. Hmm.
Yeah. Some people, they're much, much more traditional. They don't keep a lot of money in their regular bank account.
Yeah.
So yeah, everything that he was planning to spend for the transaction was still in the 401k. He hadn't pulled any money down. So they're like, why don't we have our earnest money? That would be
Like, well.
right. Well, so and they they didn't cancel the transaction or anything like that, but you just want the transaction to be as smooth as amicable as possible for everyone, sellers
Yeah.
included. So you want to think about how everybody's impacted. So being prepared is extremely important.
Yeah. Definitely. Definitely. So, when Lisa gives you a pre-approval, she gives you a max as far as how much you could spend, and
Yep.
we kind of talked about budgeting, right? How much you want to spend. So we're not saying that you shouldn't max out your pre-approval, but make sure you have discussions prior to doing that. Make sure you have a discussion with your lender, understanding your numbers, going back, having an understanding with maybe your significant other.
Oh
Um,
yeah.
right? You all deciding as a pair, like, is this expense that we're willing to take on because we really love this house, or we're
Yeah.
not finding the houses that we want in our price range. So sometimes you have to increase your price range in order to get the things that you
Right.
really want and
Right.
find a nice house.
Market dictates that sometimes, and usually the conversation that I'm having with people is, we think of things in terms of monthly payment. So where are you comfortable? Normally it's a range. Usually it's not just one number, like it's not, well, 1,800 and that's it. No, you between 17 and 2,000 probably.
Hmm. Right.
So, but you have to think kind of a range, because there's no guarantee that you'll get a mortgage. I can guarantee that you won't get a mortgage. That's exactly $1,800, right?
Hmm.
So you have to think about what's a range where you would feel comfortable. I'd be comfortable at 1,700, but if I had to push it to 2,100, I could still work within that as well. And then just stick to your guns about what it is that you decide where you're comfortable, because really that's a question for you to answer. I can tell you what is affordable by our parameters. I
Right.
can legally only put you in loans that are considered affordable. They have to be what we call qualified mortgages. So if you take, conventional or government loans, those are what we call qualified loans, qualified mortgages. So I have specific parameters that legally I can put you into the specific type of loan, but I'm not the one making the payment every month. So
Yeah.
you
Yeah.
have to still be comfortable with what that payment is. Just because somebody gives you a pre-approval, because I've seen people do this, they got a pre-approval for $300,000. They think they have to now go out and spend $300,000.
300.
Well, you
Right.
don't. If you
Yeah.
find a house
So
that
that's
is
what I was gonna say.
250, mm-hmm,
Sometimes you might give a approval for $425,000, but realistically, they don't really need to spend that much. They can,
right,
they might find a house in 300,000, $285,000 that
absolutely,
fits exactly what they need, and now you've actually kind of saved money, right? For that
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 you were
you're not
prepared to spend. Now you don't have to spend
that you don't have
it.
to spend. And then a lot of times this may be your first home. Purchase something that might be a little bit more reasonable. Live in that home for about 5 years, and then you can upgrade.
Well,
Right.
we're moving on up, moving on up.
Right, right, right. So now, that first house man had 3 bedrooms, 1 bath, and now say, okay, now we're growing. We got 2 kids now,
Yeah,
and the kids are older. So there's definitely take that sale of that first home, use that towards your down payment of your next home, and now you can afford, more realistically. Right. So.
there you go.
Mhm.
Absolutely. And so once you've done that, you've looked at your pre-approval and everything and decided where you're comfortable as far as your budget. Now you want to think about, because that's your monthly payment, right? But now you want to think about what we call cash to close. So we got a few minutes left. I want to just real quick go over some of what that's going to look like. So you're
We got to touch on sellers too. So let's
okay.
give some time for sellers.
Okay. So
Hmm.
so real quick, your cash to close is It's basically the amount of all the fees on the loan, all the costs and fees of the loan, and then all the credits of the loan. So, like tax prorations, because we do pay taxes in arrearage here in the state of Illinois. So, tax prorations, any kind of seller credits or lender credits that you get, anything that comes back to you is like something where we can deduct from that total amount. So, like, say, for example, if your closing costs came up to a total of, say, $15,000, and then the seller gave you a credit of $5,000. Now, instead of you having to bring 15,000, you only have to bring 10,000 as your cash to close. So that would be something that we would go over with in detail. I normally send out a video at that point in time when we discuss cash to close, so that way you have an idea of what that's going to look like.
Okay. All right. All right. Well, that's great. So now the buyers are done, but you sellers want some tips too, right?
Yes.
Right. So for the sellers, you still do, although you're selling the property and you're looking to bring some money in, you do have some expenses that you have to budget for yourself as well. So some of those expenses are the agent commission, and repairs, staging, and closing fees. So, as a seller, seller commission, this as of August 17th, there's some new guidelines that have been set. Seller commission,
Mhm.
most of the time now, previously you would pay for the listing agent's commission and the buyer's commission. Now the buyer's commission would be negotiated in the offer of the property, but there's still, you want your home to sell. Most likely, you might want to cover your the listing agent's commission as well as the buyer's commission. The other thing is repairs. So while we're making sure preparing the house in order to sell, you might have to do some of those repairs that you've kind of walked past that you uh, hadn't thought about. You were just used to the door handle not working. Right. So now you have to kind of think about that. Oh, okay, someone's buying my house. I need to repair this door handle, these cabinets, paint a little bit. So those are some costs that you may inquire prior to actually listing your home to prepare it to actually go on the market.
Mhm.
You could also sometimes you might want to do a listing was it
Like an inspection.
home inspection. Thank you.
Hmm.
Right. So you might want to do a home inspection. Sometimes I'm not sure if I really suggest it, only because if the home inspector discloses something, you have to disclose that. And so what that means is if you not, if you don't know about it, you don't have to disclose it. But it also, but
I
a
know just.
home inspection, I know, right? Right. Like, right. It's kind of color, kind of right. But if you want to make sure that you're getting the best best bang for your buck, and making sure that you're selling your home and getting more value for your home, then you could do the home inspection, pre-home inspection, or do a appraisal. And so I have an appraiser that will come out to the house and actually go through and look at anything that is FHA required, and
Okay.
tell you, identify those things that need to be resolved prior to us listing your property.
Now
So,
that's a great idea, because that's probably the most stringent standard. So
hmm
that's a
hmm
great idea to have it
yeah.
done to
So,
FHA
like,
standard.
I had one of my previous clients, he was selling his building. And so we had the appraiser come out and look at the building and caught all FHA guideline issues that may have been called on the appraisal, and then he fixed those. So when his appraiser finally came out, there was only just a small few things that was missed. So that's a good, so that is an option. I'm not saying, for you as well. um and then also the other thing is calculating, working with the realtor like myself, that helps you determine what your net value is, right? So how much you're going to get at the close of your sale, and then being able to use some of that money on the purchase of your next sale. So we would work with the lender. I would tell you, determine what your net value is based on looking at the properties, at least 3 properties in the area, which is very similar to what a appraiser does to say what the value of your home.
Right.
And then in return, that helps us list your property, gives you an idea of what expenses that may occur in selling your property, and then also leaving that with a return that we can use on the next purchase of your home.
Yeah. Very
So
good.
yeah.
Sounds
So
like they'll be ready.
yeah. So then they're ready. Yeah. So those are a few tips for the sellers as well. So if you guys need any assistance from us, we are here for you. So whether you are interested in purchasing a home or selling your home. And so my name is Dione Branch with Allure Dream Homes, and you can contact me at 773-819-6092. And this is Lisa J. White,
Lisa J.
and her Lisa J. And her number is 630-381-5855. And so we just want you to come join us every week, 6 p.m. on Wednesday. We're here to have conversation with you. We'd love for you to join into our chats and talk to us. You may have some
Yeah.
questions, and we'll be here to answer them for you.
We like answering questions. So yes, bring them on.
Yeah. All right. Well, we appreciate it. Thank you for joining us.
Everybody have a great Wednesday. One more week before Thanksgiving. Gobble, 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 gobble.
All right.
There's more music.